Hi, this is Nicole from AirCorp. One of the main reasons why so many businesses choose to set up in Hong Kong is that it has a very attractive tax regime. Hong Kong has no VAT. Hong Kong does not tax capital gains when you sell your business. But most importantly, Hong Kong has a very attractive profits tax system. So in today's video, we are going to explain the 4 basic things you need to know about Hong Kong profits tax. And if you need more detailed information, just click the link below to our complete in-depth written guide. So let's start with item number 1, Hong Kong's Territorial Tax System. Let's keep it simple. Territorial Tax System is a simple way of saying that your Hong Kong company only pays tax in Hong Kong if it has business in Hong Kong. In other words, if you have a Hong Kong company with no business in Hong Kong, then your company is not subject to profits tax in Hong Kong. This is what we call an offshore company or the offshore profits tax exemption. Generally speaking, a company is eligible for the offshore profit tax exemption if it has no employee in Hong Kong, it is not managed from Hong Kong, it has no customers or business in Hong Kong, or it does not sell products or services in Hong Kong. So, if your company is in this situation, then you can claim for the offshore status and pay 0% tax on your profits. The second thing you need to know is that Hong Kong has a 2-tier corporate tax rates. So, if you have a company with business in Hong Kong, you'll need to pay profits tax in Hong Kong. In this case, your company's profits will be taxed at 2 different rates. The first 2 million Hong Kong dollars will be subject to 8.25% tax, which is very attractive, in particular for SMEs. And then all your profits above 2 million Hong Kong dollars will be taxed at 16.5%. But Hong Kong also gives you the possibility to legally reduce your tax. For example, most expenses that you incur to run your business are deductible and will reduce your tax base. For example, if you can deduct from your taxable income the rental that you pay for your office, your professional travel expenses, your client and supplier entertainment expenses. For example, if you take a client for lunch, the salary or remuneration that you pay to employees or to yourself, and so on. So, even if your company is not offshore, and if you need to pay tax in Hong Kong, the reality is that the tax you will pay can actually be very reasonable. The third thing you need to know, and that is very important, is that each year your company needs to file a profits tax return. Each year you'll receive a profit tax return, also known as Form BIR 51, from the Hong Kong Inland Revenue Department. This form is for reporting the profits of your company during its last financial year. It is normally received in early April, and the deadline is to return it. Basically, depends on the date when your company ends its financial year. Here again, if you need more information, I invite you to read our full publication in the link below. But what is really important is that you submit your profit tax return on time. No matter if your company has not started its business or it is losing money, you still need to submit it. Because if you don't, then the trouble starts. You'll be subject to progressive penalties and may end up in court. Item number 4, and it is a question. Do I need to prepare audited accounts? This is the most popular question that we have many clients ask. So just to be very clear once and for all, yes, you need to prepare audited financial statements for your company. Actually, any Hong Kong company needs to prepare annual audited accounts each year. The only exception is when a company is dormant, meaning that it has no business and has declared that it is dormant to the company's registry. Now, some smart people will tell you that you do not need to prepare audited accounts if your company's revenue is less than 2 million Hong Kong dollars. Now, that is simply not true. Let me explain. A company with revenue below 2 million Hong Kong dollars is not required to submit audited accounts to the Hong Kong Tax Authority, but it is still supposed to have prepared audited accounts, and the authority may request them at any time. So, this is it for today's video. If you want more information, please check our full guide to Hong Kong profits tax in the link below. If you have any questions, just contact us or leave them in the comments. Our team at AirCorp includes professional accountants and tax lawyers who are happy to schedule a call and answer your questions. Till next time, stay tuned.